Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES made a new all-time high, and at this point heading into the open, the buy side is dominant. We know that the larger time frame bias continues to be bullish, and off the open, we have resistance at 84.75 to 86.75, which marks yesterday's high as well as the overnight high, and is really the main inflection point. So at this point, the question is whether there is sufficient strength and momentum in the market to break beyond initial resistance and continue to set new highs. By default, we are going to give more edge to the buy side with the understanding that we do need to see continued upside momentum. Now, because we're at the all-time highs, it doesn't necessarily need to be very high momentum to the upside. So it's not like we really need to see tick extremes to continue going higher. It could be a slower pace, but as long as we're not seeing downside ticks and as long as the advanced decline line is trending to the upside, we can slowly make our way to higher prices. But 84.75 to 86.75 is the only hard resistance we have at this point. Beyond that, the market will be making new highs and there is no hard resistance. So the 95 quarter, 97 quarter, and 2200, these are just areas where the range potential of the day could get exhausted. And that's really about it. So those are not really hard areas of resistance. But given the recent ranges, if the market gets up into 95 quarter, 97 quarter, or even close to it, and especially 2200, the range of the day would very likely be exhausted and there wouldn't really be much reward potential to justify continued buying up there. On the downside, we have support at 75.75 to 77.75, and that is still technically an area that buy side can defend, but we are going to have to see how the market is approaching it. And the question at that point is going to be whether there is still potential to return back up into the 84.75 to 86.75. So what are the probabilities of the market turning around from initial support and going back up? Because if the market is truly strong, then it won't even go down into initial support. And if it goes down into initial support, then you really have to question the state of the market and the level of strength or weakness available on the day time frame. So at 75.75 to 77.75, we have to determine the real-time market situation and just look at what the reward to risk is and how the probabilities are shaping up, because initial support may not offer enough reward potential to justify going long yet again. So it's going to depend on how we approach it, what the momentum situation looks like. Below it, we have yesterday's RTH low at 74, open gap 72.75, naked V pocket 72, and at that naked V pocket 72, we also have yesterday's overnight low at 71.75. So at that point in time, we can start to see buyers starting to step back in because of that larger time frame bias still being bullish. So at the naked V pocket 72, the 68 to 70, those are areas where the buyers can still be active yet again. And same goes for the support zones below at 63 to 65 and 58 half to 60 half. Those are still areas where responsive buyers can step back in. So those are really the main ideas heading into the open. We know that the Russell has been making fresh all-time highs for the last several days, and the bigger idea has been that the other markets can follow. And so far, that's the theme that's been playing out. So now the question is whether there is still enough strength in the market to continue making new highs in the S&P. We've already made a marginal high, and we know that the buy side is dominant. And now, as long as we continue to see that strength in the Russell and in the underlying momentum and advanced decline, then we could just continue going higher. And again, it doesn't necessarily have to be a very high momentum push to the upside. But you do want to see at least the tick holding above zero and printing around plus 500 to 700. So it doesn't have to be any major tick extremes, but still you do need to see some level of upside momentum in order to continue printing new highs. And if you are seeing a complete lack of momentum or downside momentum, then given that the market's trading at the all-time high, it would be very risky for new buyers to step in, and that could potentially even offer us a short setup. So our short-term bias on the day continues to be neutral because we know that the market is at an inflection point, and there is the possibility of sellers stepping in, and there is possibility of failure too. We have to be at least open-minded to that, but with the understanding that the larger time frame bias is clearly bullish, and for that reason, we have to exercise some caution on the short side and make sure that if we are shorting the market, we are securing decent trade location, or there are just many signs supporting the downside or clear-cut downside momentum, which of course would limit the potential for the market making new highs. So that's really how ES is shaping up heading into the open. Let's see how it responds to 84.75 to 86.75, and we'll take it from there.